Guys, I know a lot of you kind of like just completely follow this 4 year cycle and it's like the end all be all, but I don't think people should actually think like that. I'm going to tell you why. I mean, people talk about the 4 year cycle like it's always been here. It's always the way it's going to be because it's always the way it was. But seriously, like it's not like there's been like 24 year cycles that have happened the exact same way. There's been like two, guys, like two, like 2017 and 2021. You could make a case for 2013, but there were almost no altcoins then. Ethereum didn't even exist, and that's obviously playing a major role in this bull run. And plus, 2017 didn't really collapse because of any macro factors or anything. It essentially collapsed because of one reason, because Mt. Gox. And Mt. Gox control like 90% of the Bitcoin flows at that point. And there is not a single exchange that can even come close to that. Mt. Gox collapse isn't the same as FTX collapse. Like, FTX collapse did not actually trigger the bear market. We were already in bear even before FTX. We were already in bear even before Terra Luna. We essentially went into bear like in November of 2021 after the $69,000. And that was a lot of the SBFs like pumping it up. But after like Russia invaded Ukraine, like we essentially went straight down. Like Terra Luna just made us go further down. FTX after Terra Luna made us go even further down. We might have not hit $15,000 if not for FTX. We might have stayed at like 25,000 or something, but it was definitely down from 69,000. So FTX, despite how big it was not the same thing or anywhere near the magnitude of Mt. Gox. And had FTX basically gone down like right before we had a big bull run, I believe it would have been a pretty big hit, but I still think the bull run would have happened. Whereas Mt. Gox just essentially killed everything because it controlled 90% of the market. I mean, that is kind of what you get when like a former Magic the Gathering platform, and yes, Mt. Gox before was a Magic the Gathering platform, gets used to transact billions of dollars and is the core of basically what you're trying to build as an economic system. This is kind of dumb, but that was Jed McCaleb, and like he's rich and all, but not really the best record when it actually comes to crypto. Using an MTG site, using like an MTG platform to actually do a crypto exchange. And if you don't believe me, look it up. That's exactly what he did. So 2013 was a little different because it was basically like one platform collapse that caused the entire thing, whereas the others weren't. And the other thing is like there weren't really that many alts. There was like XRP essentially, but that didn't really play a huge part in why it collapsed. And Ethereum didn't exist because Ethereum didn't come around until 2014, until that bear market in between the bull market. And there just weren't that many people in it. So essentially, you basically have two bear markets to actually look at, or bear bull markets to look at, like 2017 to 2021 and 2021 until now. And everyone's trying to time the peak because roughly they kind of operate on the same cycle. But one of the other reasons why you can't look at that is because they weren't really the same run. Like they didn't operate the same way, and it was really hard to basically for you to sell at the same points. Now, the absolute Bitcoin top for the two actually did happen pretty close. In 2021, it was in November. In 2017, it was actually December. It was a month later. And but the altcoin tops happened at very, very different times. The altcoin top in 2017 didn't happen in 2018 until 2018 January. And pretty much all the coins basically reached their top on the exact same day almost in 2018. Like if you look at the graph, like Tron, XRP, Cardano, they basically all, I think it was like January 12th or January 13th that they reached their high. It was like sometime like fairly early in January, and then they crashed down really fast. If you look at 2021, it didn't work like that. In fact, for a lot of the coins, altcoins, they didn't even reach their all-time high in the second hump of the bull run, which was in November. They reached their all-time high in the first hump of the bull run, which was in April, and that's what fooled us all. Because if you look at VeChain and a bunch of others, they actually reached their max way back in April, like 8 months basically previous to the 2017 bull run. So the cycles did not really match up. Yeah, the Bitcoin top matched up, but even the cycles on Bitcoin didn't match up because there was a 7-month delay between the first top and the second top. And as many people figured out, the second top wouldn't have happened at all if FTX and SBF wasn't manipulating. That's kind of why it died so fast. And obviously, because of inflation, and that kind of killed it as well. So the macroeconomic factors were very different. The cycles themselves were very different because essentially, like in 2018, you had one giant bull run, whereas in 2021 you had two, and the altcoin top was many, many months earlier in 2022 than it was in 2017. This is why people are actually saying right now that we're following the 2017 cycle instead of the 2021 cycle. Because if we were following the 2021 cycle, there's a really good chance we're already in big trouble because not too many of the altcoins, like the smaller ones at least, have reached their top, and we're several months behind the April top. And in fact, April was a very, very kind of like a bottom place for our market because of Trump's tariffs. He announced the tariffs in March, and then it kind of dumped from in February, and then it dumped from like February until April, and then we came back up after April. And a lot of the alts actually reached their top in November, but that November is like over a year before the 2021 top, and several months before the 2017 top, and several months before the 2021 top. So like the thing is, like, if they're trying to follow 2021, we're already behind, and it may not actually happen. So that's why they're pegging everything on 2017. But there's definitely no guarantee in that, and that's why you got to look for more scenarios. Like, there's so many factors that are different this time. Like, there's real institutional money coming in, which there wasn't in 2021 or 2017. There's like Michael Saylor, there's BlackRock and all this. There's governmental buying. Like, the government's like heavily involved in crypto now, and they weren't really heavily involved. Like, there were like some scares with like regulations and stuff, but they weren't heavily involved in the previous two cycles. There weren't like the funds that were involved. There wasn't as much like political pressure. There wasn't as much like bribery. Not saying that's like good or bad, but there wasn't actually all that stuff in the previous two bull runs. So you can't just look at it the same way. And the macro factors weren't the same. Like in 2013, no one really cared about the interest rate. I mean, things were actually quite good. We gotten out of like 08, 09 a couple of years ago, and the economy would soar for like another 6 years before COVID. So like we were like, up. That's why we went from like, that's part of the reason we were able to go from a couple of cents to literally like $1,000 by the time of that in Bitcoin by the time that bull run actually was over. And yeah, there is the law of diminishing returns, because like I think the previous like top like 09, it was like $1 or something. Then we went to $1,000, and then we jumped from 1,000 to 20,000, which numerically is much bigger, but it's only a 20x from top to top. Whereas like the last one was like 1,000x from top to top, and then 20 something thousand to 69,000, that was like 3.5, and now like it's going to be like 69k to hopefully 150, 180, and that'll be less than 3x. That's kind of like what I expect, and that's the law of diminishing returns. And of course, the timelines are very, very different. This time it's also different as well. Interest rates are actually like the inflation's actually come down a lot from the inflation that kind of killed the last bull run, and interest rates are actually coming down instead of going up, or they're kind of staying even right now, but they're actually starting to come down, especially when Trump appoints his new guy, rather than going up, because they have to tighten the market. So like basically last time was like, QT hit. Now we're trying to end QT. There's a lot more organizations that want to buy, and essentially Bitcoin has more buyers. So Bitcoin has actually taken a huge lead over altcoins in terms of growth. So like, we didn't have the ETFs last time, so Bitcoin didn't get that leap. And despite that, Bitcoin ratio still didn't reach like 70% like last time. So overall, cycle over cycle, like Bitcoin dominance is actually coming down. And now we're getting like a little bit where like, there's been an Ethereum ETF for a couple of months now. And essentially Bitcoin's coming down. Ethereum's dropping a little bit with Bitcoin, but overall it's like gaining dominance as people are getting into the Ethereum ETFs, and they're realizing, hey, maybe we can get some staking ETFs with Ethereum. So there's that in play. Like none of that stuff actually happened in the last cycles. That's why I think this cycle is going to be very, very different. It's already playing out to be quite different from both 2021 and 2017. And some people are just like really obsessed with the whole cycle thing because they want something that's easy to predict. But in truth, none of the cycles have actually been the same. They've kind of hit tops and troughs at different times. The only thing that was close was like the ultimate Bitcoin top. But if you actually look at the past two cycles, they've actually acted very, very differently. They obviously gone down for different reasons along different timelines as well. So there shouldn't be as much priority on the 4 year cycle as there was before. I think it's like a good framework, but you do have to pay much more attention to macro factors because they play a much more important role. No one can deny, like, him announcing the tariffs had a direct negative effect on crypto. No one can deny that, like, it's kind of controlled by what Jerome Powell thinks about the interest rates. I think that's incredibly stupid, by the ways. But it is what it is, so you got to follow it. And none of those factors even mattered at all in the previous bull runs. It was basically inflation going up. Not quite like the interest rates going up. I think it was like inflation going up, and then people knew that rates were going up instead of and not really like rates were already going up. It was like a couple of months ahead. They already kind of like had that dip, and now people know that rates are going down next year, but they're not quite completely FOMOing in yet. I mean, looking at the Bitcoin ETFs and the altcoin ETF and the Ethereum ETF, that's why I'm thinking like the bull run will either be in October or sometime next year, because eventually those ETFs are going to filter through, and like what's happening with Ethereum right now, I think will actually filter through to some of the altcoins, and I think some of the altcoins getting them is going to boost up the rest of the altcoins as well. And like, the altcoin I'm holding, Cardano, I think they'll get an ETF, which is going to be really good. And I do think ultimately, as these coins get ETFs, some of the staking ETFs are coming out because the SEC said certain staking isn't actually security. So like, I think the ETFs where you're able to stake and generate a yield will actually be more popular. And I think those coins will actually ultimately profit more from their ETFs than coins that don't actually have a native staking yield. Because like I said, if you're going to invest, billions, hundreds of millions of dollars into like a coin ETF, you want that 3%. It actually is worth a lot to a company. I mean, me throwing $100 at it, the 3% is like $3 a year. I don't really care. There was $100 million, $3 million a year that I care about. And you can bet a company will actually care about that as well, because companies are always trying to maximize profit, and giving up 3% does not really make that much sense. So I think those will actually be very, very popular. And like, with those coins, a lot of their ecosystems are going to pump up, and that'll actually bring the rest of it up as well. Now, like I said, Bitcoin is going to follow, I think, the economic cycle a lot more now than before. Macro plays a lot more into it, where like before, Bitcoin was fairly detached from the economic cycle. Now that's not true anymore. Like, people have realized it is an investment asset, and all cryptos are essentially investment assets at this point. Some of you don't like that idea, but realistically it is. So like, I think that has a lot of effect on it too. So there's a lot more factors you have to consider rather than just the 4 year cycle or like stock to flow or whatever, because it's not going to follow it nearly as nicely. And that's what I think a lot of people don't like. They want an easy template to actually follow. And now, because it's actually integrated itself more and more with the macro economy, it's actually becoming harder and harder and harder to actually predict. And like the technical analysis, whichever TA tools you have, or if you're just following the 4 year cycle, isn't really as effective anymore. Especially like when you have an administration that can kind of like change like what the economy thinks with like a tweet or something. The technical analysis tools don't quite work as well. You can look at like M2 and stuff, but it doesn't always follow that either. And sometimes it's like a trailing indicator as well. So I think a lot of people are like, hoping to just like copy like some kind of template so they can actually predict really easily and relatively well. And realistically, like, I don't think that's as possible anymore, especially with like all the small meme coins. You can't really predict that at all. Those are just like more or less like what's trending or not. But even with like the bigger altcoins, like it's not quite as predictable as it is. Unless you're doing like more long term. And I think like with that, you just basically need the staking ETFs and look at which coins have staking ETFs. And I think those are going to be like really, really big winners after a while. I think initially like people will buy ETFs from a lot of the coins, but after a while, they're going to look at the staking stuff, whether it's Ethereum, Solana, or whatever. and they're going to look at the ones that actually can generate you yield. So I kind of would like follow that right now. I don't know, like I still pay attention to the 4-year cycle, but not anymore if like by the end of the year we don't have a big pump, because then that would break the cycle. And like we have another pump April of next year, because basically Trump got rid of Powell and the new guy comes in, or like May of next year, whenever he comes in. And we have a pump right after that because he lowers rates. That shows you the 4-year cycle is also over, and it's really dependent on what Trump's guys do, or like the whole macroeconomic factor. Because remember, if his guy like cuts rates, we have a massive pump, and then like inflation goes way up, and then like the entire market dumps, crypto's going to dump as well. So if that happens, that just means like, the 4-year cycle's gone, the macro economy has taken over, and it's really going to be dependent on the president's tweets and what his policies that he kind of flip-flops every day on, what he's actually going to do, and like just basically what he feels will make him more popular, which is going to be a lot more hard to predict. But that's kind of the fun of crypto, because like, people want to, want the volatility, and that's why a lot of people are actually in crypto. And having someone that's, very, very volatile brings volatility. I actually see a lot of interest kind of like drowning in crypto right now because Bitcoin's not as volatile. But if you're going to play altcoins and all this stuff, that's how you get the volatility. And especially if you have like, the market that can be easily racked by a couple of tweets, that just makes it more exciting, and people will leverage that. Stupid, but they will. And I think that'll just raise the interest bar for everyone. So happily gambling, everyone. And that's kind of what I have to say about the 4-year cycle. I think it's going to be less and less relevant as time goes on. Not really to pronounce it dead at this point, but watching it very closely because I see other factors beginning to influence Bitcoin more than the 4-year cycle itself. So that's all for now. Like and subscribe, hit the bell notifications button, and I will see you guys next time.